And so what I did is I wanted to get short off of a push up into the cloud area, and then hopefully that acted as the between the cloud, a Bollinger Band, and this box acting like resistance to the downside. So I was early to the trade, and I ended up getting putting my stop in too soon, and got stopped out for $5. $5 profit, right? So enough to cover my commissions. We kind of push up a little bit, and then we come down. We make the clean break to the downside on the off the box. We come up. We test the box again into the cloud, and kaput. So the trade was there. The execution was there. The patience was not. So first start of the trade, we'll call this break even. Better than yesterday of negative. Frustrating that it came down, but I said, okay, that's fine. There's more time in the day. So we come down. So it's 7:10 here. I see this Bollinger Band poke, and I was actually looking for a little bit of a fill lower, and I didn't get it. And then we pushed up, and I was just targeting the upper regressionary channel here that I had drawn. I didn't get filled, so nothing happened. So right about this time, I'm heading out the door to go to work, to get to work early today. So we come up into this box, test it, nothing happens. Get rejected. We come up, we test again, nothing happens. We come up, we test it again, nothing. CPI comes out, the market goes bananas, and then gets a nice flush. So now it's 9. The 9 o'clock opening range is here. So now I'm waiting. I'm waiting for an opportunity. Right? It's 9 o'clock. I unfortunately missed this. I had other commitments in the morning, so I missed this nice test on the 9 o'clock range for this push up. But I missed this here. But that's okay. Just being patient. Trying to trade with a plan. Right? So I see the day is kind of coming along here. And we get down below this channel, and we start to test the closing range. We get below this box, and we come up. So what I'm thinking of is a short off the cloud to the bottom of the closing range here. And this was a great long right here, poke into the box, Bollinger Band for a move up. So I'm watching. I can see VIX, increasing over here, bounced off of the weekly open, right? And we're moving up. So I'm gonna say, okay. So I took this short here at 94 1/4. I took it off of this channel box, not the cloud. So I waited. I waited patiently, right? I was contemplating adding, but I didn't. I did not add. I was a little cautious, and it comes down, and then I get this nice flush, and my target was down here, and then we get this push up, and at that point my stop's in. I'm stopped out for break even, we'll call it. So we come down, and then we're in. I'm short, and I'm looking for a rejection off this box, 10.5, and looking for a move down into this box again. So it doesn't happen. I get stopped out, break even. Okay, so I'm break even on the day, well, slightly green, but more break even, we'll call it. We get a push up, comes back down, get a push up, comes back down. So now I go ahead, and I'm seeing that maybe this box is going to get pushed through here, right? I can see VIX kind of like dwindling over here. So I take a long at 13.5. I put my stop in when we get this push up, stopped right out. Okay, I gotta show some more patience here. So I take a short here at 704 1/2. And why did I take that short? We're not really at the cloud. We're not at the box. Where did I get this number from? So I actually drew a line from the top, from today's high, like this, right? And I was thinking, and I saw that, sorry, that's actually wrong. I actually drew the first line I draw was like this. So I drew a line like here. I deleted all this stuff earlier today. Here, right? And I drew a line from here. Like that. So 704.25. We get this little pop below. I put my entry right at the line, right? I get filled. And then I'm going to go ahead and target down here, 91. So I front ran it a little bit just in case, because I was just expecting a move and maybe some support here for a move back up higher, because we're really choppy, right? We're not really showing any clear directions. So I get filled out. So now I'm positive on the day, 704.5 to 96. So that's like 8 points. Not the greatest trade, but positive nonetheless. So then I go ahead and take, excuse me, another trade at 78.5 here, at the middle of this box for a continuation down. We don't really get it. We kind of come down, and I put my stop in break even because I misread this trade, right? I should have been way more patient here for a move into the cloud, because this would have basically been a null trade anyways. It did come down, 13.75 points, but I did not exit. I got stopped out break even. So one positive trade, lots of break even so far. So now I'm waiting till the noon rotation, because I'm break even all over, and I'm positive on the day with one trade. So I go ahead and mark the rotation off the noon time. It overlaps with another time period, so we've got double support, double resistance, but a bigger zone now. So I'm going to wait here. I got to wait patiently for some sort of opportunity. So I see this guy here, right? This nice, big, juicy Bollinger Band poke here. Okay. I unfortunately did not take it, but what a great long. Blows through the box, comes back and tests it. Very much an A setup, right? And then comes up. The only problem is we poked down here. We had so much consolidation that the Bollinger Band's compressed, right? And then we pushed up and pushed through the top Bollinger Band. So we have like conflicting signals. The only reason why I feel this was a pretty good long was momentum was moving to the upside. Our MACDs were moving to the upside, and this was at 1300. And where's VIX? VIX is at the low, gets a rejection off of this negative cloud. So we're moving down, right? The VIX popped off this morning and then has been just selling off all day. I understand the VIX is not a traded asset, but what I mean is the volatility is decreasing. And as volatility decreases, the market should be inverse and go up. And same vice versa, if volatility increases, the market goes down. When they start to move in the same direction is when there's something wrong. If volatility is increasing, the market's going up, the internals are fearful that this move up is not correct. Or if volatility is decreasing and the market's going down, then people are feeling that this market needs to just continue to go down, that's where it needs to go. So I did not get long here. Where did I get long? Up here. Okay. So 26.5. Right off the top of the box. We move through these two double resistances. We come up. I'm looking for a test, some consolidation, and then a move higher. And where did I go wrong here? 13.75 points, right? Oh, not that. 13.75 points. It's down here. Below the bottom of the box. That would have been a true invalidation, right? If the market came all the way back down below. Off this move up, right? Bullish wave. We're a little bit on the exhausted side here, but I'm expecting a move up because, again, at this time, 13.15, we're at 13.15. Market is selling off. Now, the only thing I was looking at was a potential rejection off of the opening range on the week on the VIX, right? That this was acting as support. There could be some more support again, right? How many times do we knock on it before we go through it or reject off of it? So I wasn't patient. So I ended up stopping myself out just to try to keep green on the day after being red. And man, was I wrong. Right? Not only was I wrong, it ended up would have been a banger of a trade, right? 26 to, I mean, I don't count this. This was some sort of news thing at 3 o'clock. But, FOMC, I'm sorry, 2 o'clock FOMC minutes, right? There was 39.5 points on the table there. I could have easily added a couple down here and stopped out, right, as a true invalidation and had, almost 40 points on, let's say, 3 contracts, selling one each on each level higher. But a very, very nice green trade. But I didn't do that. I was my emotional capital was waning again because of all the break evens and the fact that we were at support on the VIX. And what you can see is as we make this move higher here, VIX gets that crack through. So I expect some sort of retest and see what we're going to do. And we do that, right? FOMC minutes come out. This goes banana shit crazy here, right? And then I go ahead and start to try to claw myself back to positive, right? I get short here off of some momentum to the downside. Stop out. I go ahead and take some trades here. Get a couple points. Right? So, nice couple little green shots there. Looking at this box, which is the 3 o'clock rotation. Now we're late in the day. This is where everything kind of breaks down, right? Look at all these wicks. Just pushed up, slap. Pushed down, slap. And that was it. At this point now, all the money that I had made, I gave back, and then I made a bunch of it back and said, okay, that's it. I'm all done here. And that was at 3:15 in the afternoon. Now, we obviously made moves up. These bullish moves off of the wave were great. Off this box were great. But there was a lot of patience required as we come deep down into that 3 o'clock box. And now we're into the overnight session, and it's looks nice so far, right? We're up 29.25 points. So, takeaways. I was definitely more patient on some of the trades to try to get better entries and let the trade play out. Unfortunately, I wasn't perfect, but I did try my best here. And ended up positive on the day. I believe I was $100 plus $100. Very small. Obviously not a lot compared to some other people are trading, but I'll take this as a win as I kept the losses small, tried to let the winners go as best I could, and if I felt that I was too anxious, I obviously got stopped out. So I need to still work on my patience and my order execution, but I'm getting there one day at a time. Some things I definitely want to pay better attention to are volume, right? These volume spikes. These are, indicative of potential trap buyers, right? People buying way up here, or, as like the combine killer strategy goes, right? I need to pay a little bit better attention to that. I also need to pay better attention to maybe not trading outside of rotationary periods, right? Either not those time praise or waiting for maybe the more extreme boxes to be tested versus trying to trade in these channels. Right? You can see these channels are difficult, right? We come in, we pop up, we come in, we pop up. You got to be a little solvent here. Now, these are only 1 minute candles, but sometimes 60 seconds seems like an eternity in this market. I'm sure it's much easier to trade, at least in my opinion, when the market's doing one thing or the other. But when we got this horizontal crap, it's definitely difficult. Oops. So, I would have to say this channel is probably void at this point. We might get another retest, so I'll probably keep this on my chart. I'm gonna go ahead and plot some ranges here, just to set myself up for tomorrow. I'll be up bright and early tomorrow. I plan on trying to work on and continue to work on my patience off these trades. One thing I did notice, and I deleted this this box up here, but something that was kind of interesting, and I want to kind of show you guys here. So you can see this channel that I drawn right, but you can see up here off the see the 930 ripper, right? I drew a line from yesterday like this. And then I also do this 5 o'clock candle. Look at this huge flush down, and then all this buying or covering, or both, that got one white line. It's a PALS. That is this line right here is the 200-day simple moving average. It's a very standard line. A lot of people put just to kind of give overall market direction. So I noticed this, and even Magnum, you're welcome. And even Magnum pointed this out. So look at this, guys, right? Look at this guy. Just all these people either that shorted this move and covered, and then additionally bought to push this all the way back up. And I understand this market came right back down, but this is interesting, right? High volume Nova off the 5-minute open. So I'm just going to go ahead and extend this out to today. And I think some of you saw this, right? Here's the 930 open. So we push up into it. We push up above it. We're almost going to test the yesterday's highs. And then we kind of crapped ourselves and put it all the way back down to the opening range on the 6 p.m. open on Tuesday. And Magmat talked about this level. I thought it was interesting. Now, it was a little bit too violent for me to kind of trade. You would have had to have your orders stacked, right? Let's see if we measure from the bottom of this box up 13.75 was here. So you would have gotten stopped out. Drill down a little bit. Off the first push through, 13.75 was right here, right up here. So you wouldn't have gotten stop out on the initial push up because we had this initial giant rejection down into this rotationary box. So that measurement from top of the box to top of the box is 36.75 points. So your stop would have been break even. So you would have got, if you didn't exit your position, you would have got stopped out here. And then we pushed up again. We fluttered around. We bounce off of it. Looks nice for a long. And then we reject, test, and then reject again. So it was interesting to see that all this battling going on up here at these highs. These potential buyers trying to step back in, and sellers just selling the shit out of it, right? And what did I notice too today? We definitely chopped around a lot, right? We chop. but we showed support and resistance right here all day long, this tight range. And then we came up, test the daily highs, and then now we're grinding higher. So it was definitely interesting. So we'll see if this zone where there was all that buying right off that open on the 12th can be tested, like legit tested. Like it hasn't been tested from the top, right? It hasn't been tested from this direction. It's been tested from this direction, like it's been going out of style. And every push up above it gets slapped down. It wasn't until the overnights that pushed it up, and any sellers that were positioned up here that were shorting and had stops in this area are out, right? And if we move this like trend line over a little bit, this line over from the highs, we get this wick up above it and slap Rooney, and now we're above it, and we're showing it to be support. So it'll be interesting to see what we do here. Do we are we going to make a higher high on the trade, on the overall dynamic of the market, or are we going to get slapped around some more? So if we switch over to the daily time frame, right, and we look at this trade, right, these trading days, we have all that's buying and pushing up to the mean, right? This is the 21 EMA right here. Rejection, down. This is -1 ATR. We hover around it, and then now we're pushing back up towards the mean. So interesting to see the lace, to see if this is just a relief bounce back up to the mean for another push down, or are we truly going to start to test this upper line and see if we can reject off of it? What are we going to do here? One thing that I pay attention to is imbalance zones. So this was an imbalance right here, right? This is imbalance, and we fill out this imbalance. So interesting to say the least, in my opinion. See what we do seasonality wise. We usually chop around in the beginning of August or October, and then we get a flush before the holiday run up. And that's been a consistent thing over the past 25 years, as all the charts get plotted, together over time. So interesting to say the least. A lot of traders might think that we're going to test this up here, maybe test this upper line, and then roll over. I really don't know. Obviously time will tell what actually happens. One thing I like to look at is the 4-hour chart myself. What do we have a lot of going on a 90-day time frame? Value area low, point of control, value area high. So what is everything lining up here, right? Value area, point of control lines up with the almost full retracement here. Lines up with +2 ATR, and lines up with this. I don't think this is people buying. This looks like selling. So if there's sellers positioned here, this would offer some sort of resistance. We go out to a 180-day chart, right? Bigger market perspective. Value area high, which we're at. We're almost at +1 ATR. Okay. Again, what do we see here? A whole lot of stuff, right? How are these buyers? If people bought here and here, hey Han, you can stay. You can come in regular general. I'll just gonna be 5 more minutes. I'd love to chime in. Oh, you can't hear me. So interesting to say the least. I certainly don't. I definitely don't want the market to go down like some of us have been talking about. I mean, that would be a bad day for everyone's 401k, right? And everybody, any type of investment. So interesting to say the least. So big takeaways for me today, because Han would like to talk, and I'd love to hear some perspective on someone else. Better executions need to work on patience. Green on the day. That's what I got to go with. So I'm going to do some charting. Han's going to take over. And thanks everybody for listening to me ramble on here. Han, whenever you're ready.
Oh, sweet. I thought it was going to be 5 minutes. All right. Can you guys hear me?
Yeah, I can hear you fine.
Oh, cool. So I am driving right now, so I'm just going to kind of chat with you guys until I get home and I can pull up my screen. But for now, I'll share. Hold on 1 second. Let me see if I can share my screen. I swore that you could. Maybe you can't do it on mobile. Okay, cool. So let me get out of this, and I'll post some pictures in the general and the futures chat. Or actually, I'll post them in the let's see here, the community streams. So I'll be talking a little bit about volume profiles and how you guys can trade with them. So how this came up, I guess Magnum was asking why I called out 14,600 for his big swing trade. And he was wondering like how I came up with that zone. And I told him, you know, for those of you guys that weren't at the conversation, I told him it's a naked POC. So what a naked POC is, if you could see on the picture that I posted in the community scripts or whatever, you can see the 14,600, the circled blue red box from the profile on Wednesday. You guys see that? Someone can hop on chat and just chat and talk, so I can, because I can't see.
We can see it.
Okay, cool. So I don't know how many of you guys are familiar with volume profiles, but over the last 2 years trading, you know, to kind of give you some context, I started from scratch. I started from options to day trading, equities. Paid 2 different mentors over $5,000 on trading. And my last mentor, all he traded was supply and demand zones based off of volume profiles. Now he used a whole different type of bar. I won't go into that. And he would go off of these imbalances, he'd call them. Anyways, through that, I learned that it's really how the market works. Like, I did over 40 algorithms based off of indicators, you know, stocks, MA crossovers, everything, TTM squeeze, and none of them would work in the live market because of the volatility. And so once I started getting trained by my last mentor, I started understanding that these big zones where big buyers are stepping in are all zones that have been in the past. And so when I say a zone, I mean like a certain price level where big banks and firms will step in and take it higher or step in and take it lower. And it oscillates back and forth. So the point of control in that picture, you see 14,600, right? So, you know, it literally stopped on the dot there. I'll post another picture here. Hold on one second. I think this is... Yeah. So this picture, you can see that red dotted line is the naked POC. So the naked POC means it's a point of control. It's where the most volume was traded, where all the big people were trading on that day. So on Wednesday, you can see on Wednesday, that's where that large bull run took off from, right? So in the past, you know, I've watched hundreds, probably 1,000 videos on trading, and you know, people would make these zones based off of the candle wicks and whatnot, and I mean, sometimes it works, sometimes it doesn't. But what I found is that the point of control, if there's a naked point of control, meaning that the price hasn't come back to that place, they're going to step in again, and whether or not they reverse the whole thing, you know, that it really depends on the market structure and the market context. Whether or not it comes to it and it flips for a little bit and then it continues lower, you know, it's just one of those spots where you should always know, okay, where are the naked points of control above and below, so I can keep that as a context. Maybe I can use it as a target profit zone. If I'm, you know, trend trading down or up, I can use that as a target profit zone. Or you can try and play the mean reversal. Okay, so I'm not sure where I'm sure everyone knows like basics of volume profiles. But the yellow box is what we call the value area. So you have value area high, value area low. And a general rule of thumb that I always would trade by was if the price opens in the prior value area, that generally it's going to be a range-based day, meaning the price opens, if you look at the prior day value area and it opens in between there, we could expect to see range back and forth between either the prior value area or the prior high or the prior low. That's kind of like a rule of thumb for me. If it opens above or below, you can look for a trend. You can look at it as like a trend day, and you can look for pullbacks to certain areas to try and hop on that trend. So has everyone seen like a picture of like an options what's it called, the options bell curve?
Yeah.
Okay, cool. So the options bell curve is, you know, it's a bell curve. If you turn a volume, if you look at the volume profile, you can see it kind of looks like a bell, right? So that is what I was, and what my last mentor would call, he would call that a balance. That's the balance. That's the range of where price is most traded, right? So what happens, and you guys can do this for yourself, I can't pull it up right now, but in Sierra Chart, I used to be able to pull it up. I might be able to post some pictures later on for you guys. But what happens is price, as you know, goes up and down, right? It doesn't go sideways, it goes up and down. And it fills in those areas and creates a bell curve, right? So with an option, you're basically, if I buy an option, so for those that are not familiar with options, you're basically buying an option to buy 100 of whatever you're trading. 100. So say I bought a call on Apple, and I said, and I bought it at this certain strike price at $300. So by whatever date I buy that, by that date, the price would have to be at that within that range for me to make money. That's called being in the money. So if you look at the market as like the bell curve, and you treat it as if it's like a math equation rather than this gamble of, okay, I'm going to get in here and I'm going to have a stop and I'm going to have a target. Like, you have way better success. So what I mean by that is, if the value area is 70% of where the most volume is traded, right? Would I rather buy in the middle of that value area where it can go up or down, or would I rather buy on the edge of that value area and then ride it back to the middle, or ride it all the way back to across? What do you think as far as like chances go? Do you think I'd have a higher probability chance of a more profitable trade if I was at the edge of the value, or if I was in the middle?
At the edge.
Yeah, obviously, yeah. So, and that's a concept that's really hard for us as day traders to understand, because we want to just jump in, we want to just scalp, we want to trade as much as we can, and a lot of us started by using moving average crossovers, or the comma, or 34 EMA, 21 EMA, whatever it is, stochastics, whatever it is, like, we just love trading, and we love jumping in, we love, making money, and that's great and all. There are scalpers out there, but it was really a shift of my mentality that I had to make in order to be a more profitable trader and to trade less. And I would say to you guys that are doing that, like, it really takes a toll on you as far as like your mentality goes. And it's just hard to break that habit of over trading, especially once you learn how the market works as far as market structure. Okay, guys, I just got home. Give me 1 second here.
All right. You guys have any questions before I get on? I'm going to get on video and show you guys what I'm talking about in some more detail. Hello.
Hey, man, we can hear you.
All right, cool. Hold on 1 second. All right, can you guys hear me?
Yep.
Okay, cool. All right, I don't have much time, but let me pull this up. All right, you can see my
Yep. Can see ya on Thinkorswim here. Is this you might want to try to hide your account number, my man? Unless
yeah,
this is
this is a SIM account, so
Okay.
you guys want to try and hack me, you're not going to get any money out of it.
Okay.
All right.
You using this is Hikinashi candles?
Yeah, so these are Hikinashi candles. This is a 5 minute, so let me pull out to do a 4 hour, um, 4 hour. This would be a good example. Okay. All right, cool. So let's zoom in here. Okay, so I'll use this as an example. Delete this, delete this. Okay. So this is, daily volume profiles, right? And so you can see this is, look at this uptrend, right? So we have an uptrend and then starts flattening out and then so on and so forth, right? So, okay, so this stays straight up. And then you see as this comes back, you can see that this next day, before it wants to move up higher, it comes to this, the red right here is the point of control, right? Comes to the point of control and kind of hangs around there. It even comes down to the value area high of 2 days prior. So this is how you can kind of, when we're trending, you can look for a pullback to a naked POC. You can look for a pullback to a previous day value area high. If you're trending up, if you're trending down, you look to the previous day value area low for a pullback, and you can look. Oftentimes, those will line up with Fibonacci retracements. So if you drew a Fibonacci retracement, you could kind of see, okay, this is in a 50%, this is the 61.8, 23, whatever it is. And you can kind of confirm that way. I know some of you guys use those. So, all right, so we see the POC pullback. And then it doesn't take off right away because it's consolidating, meaning before we push higher, we need buyers to step in, and we need what the hedge firms look for and what big banks look for is they try and fake you out to make you think that it's gonna be a bearish momentum, and so they get all these retail traders and keep in mind they manipulate the market like hardcore. I've seen it myself. I've seen the spoofing on with heat maps on Sierra Chart and NinjaTrader. What they do is they place these large orders at certain price levels, and then they pull the order. So price follows the money, right? So if price is following the money, and they're placing these orders and then pulling it, that's what's called spoofing. But that's a whole different. You guys can look into that. J.P. Morgan's been caught doing it, manipulating metals. They've been fined $50 million. Anyway, so before this can push up, they need to trap some retailers that are thinking that this is going to be a reversal, right? So what they do is they pull it down, and people are going short, and then they just run all their stops, right? So you could see here that as we pull back, where do we pull back to? 2 days ago, POC, and it's to the bottom of this candle. So I mean, sometimes it's exactly on the dot, sometimes it's not. I'm not sure what I have for this, but before we set up higher, right? So say I was a Fibonacci trader, right? I'll go in here, I'll go to Fibonacci retracement, and I would go from the bottom of this calculated move to the top to see where it pulls back to. So you can see 32. Anyways, just another tool. Okay, so let's find another example. Okay, so up here, you could see this. Look at this doji. Holy shit! So this is a 4-hour candle. Anyways, you can see it blew right past that POC, but the POC had already been tapped right here and right here. But it blew past it and came closer to the value area down here. This one blew right past it, and it came all the way down to this POC. Look at that. It's literally on the dot before it took off, and it came to it twice. It used it as support. So, like I said, it goes both ways. It's oscillating. Price is oscillating. They're filling in. Just picture this volume profile as a big volume profile. So wherever there's gaps, they're going to fill it in, and it's going to create this big bell curve. All right. So oftentimes you'll see that where price is, if this is not a like a really nice bell shape, it's probably because they ran it up past a certain area. And so this would be the edge of the balance here, right? I mean, if you look at it as a whole, you could say that this is the edge, but whenever you have low value areas, like low volume nodes, you'll see price usually go through it pretty fast, right? So right here, it came down, and this was the value area. This was where they stuck. And so, they couldn't break this point. Right here, as soon as it got to here, down to this naked POC and back up. Now back up here, you have a naked POC right here, and it comes up and it touches it, right? Let's see if I can. Is someone recording this, by the way? I think there was a few guys that wanted to watch this.
I am not. I just live stream. Oh, Jams is recording.
Okay, cool. Okay, cool. So you can see it here too, right? So we start coming back down. So we come back down. So this PSC. Sorry, my mouse is not working really good. This POC was naked before it was touched there. This POC was not naked. But it came to the edge of this balance right here. See this? And then you have this low volume area. So came to here. All right, let's see here. All right, so here, I think we already pointed this one out, but when it dives down, and honestly, if we change this, let's see if I can show you guys better examples here. Um, Okay, so I'll show you guys the most recent example of the 1460 that I was talking about with Magnum. He had a large trade that he shorted, and I'm not sure who saw. Anyway, so we have this is a 30-minute chart. So we have buyers step in pretty big over here. This is what a balanced profile looks like, but you can see there's still, low volume areas in it. So anyway, so the POC was right here, and this is a naked POC because it hadn't been touched. Okay, so as we're coming back down and everyone's freaking out, I told him, you should take profit at 46 at 14,600, and it came down here, and sure enough, it's 1, 2, 3, 4 touches before turning up, right? You can see in a balanced market, it oscillates back and forth, back and forth. You can see this POC right here as it came back to the prior day POC. You can see it kind of flipped right through this one last night, but it did use it as support right here when sellers were trying to freak out people that I was going to keep going down. They just used it again and pushed it up higher. All right, so do you guys have any questions about that section of it? No? Okay, cool. So, the next thing I'll cover is standard deviations. All right, so this standard deviation, there are scripts for Trailvate, there's scripts for Ninja, not Ninja, there's scripts for TOS, the scripts for trading view. And basically what it is it calculates the standard deviations based off of the prior day VIX. So the VIX is for the ES and the VIXN is for the NQ, and off the prior day settlement of, the settlement is the prior, basically the closing of. So when you download this, you have to manually put in the prior day settlement. You can just Google, NQ ES settlement. You look at the most recent contract and it would say last close or settlement price. And then you Google, VIX close and you look at the last day close, or VIXN close and last day close, and you would plug that number in every single time. So how this works is it calculates based off of the volatility where the standard deviations are for that day. All right. So this was for today. So ignore this. This is the settlement price. So when it closed, this is where it closed at. And based off of the volatility, which is the VIX or the VIXN, it tells you, okay, this is a 0.25% calculated move. This is a 0.50 calculated move, 0.750, and then so on and so forth, 1%. And then we have 0.25, 0.5, 0.75, and then 1, and it goes up to 2. So how do I trade with this? Well, I would say basically, as far as context goes, you want to look at this as kind of as a meter, right? So the possibility of getting to this standard deviation is what percent, So you're looking at it as like, okay, obviously we're not going to make it all the way up to 1487 today to top this, because you could. There are days I've been trading days where I've seen it drop 400 500 points in one day, and it's like, what the hell's going on? And those are the hardest days to trade, because you're trying to do mean reversion. You just don't know like what the hell's going on. It's not based off of anything. So how did I use this today? So let me try and pull up my other screen real quick. Does anybody know how to block your account information on Tradeovate? Okay. Can you guys hear me? You there?
Yeah, we got you.
Okay, cool. You can see my screen?
Yeah.
Okay, cool. All right, so this is going to be really brief because I got to go. But so this is basically how I use it. So this is a 3-minute candle, but you can use, sometimes I use 22 range to kind of dial in my entries. 22 tick Renko. So you can see here so the green line is 20, let me see, 34, yellow's 55, and red is 89. And then the standard deviation, like I said, is these red and green lines. All right, so one of the plays that I played today, I played a few. I'll show you the different screens so you guys can see it. Okay, so this white line right here is settlement, right? So that's where I think, yeah, 14,660. Yeah, so that's settlement. Green line is, 0.25. The first one's 0.25, and then so on and so forth. And so you can see that this morning at 6 a.m. it came, our settlements right here, and it came back and kind of respected it right here. Sometimes that's why you guys are looking at like VWAP or other indicators, like even these EMAs, like, and it just blows right through it. It's like there's these price zones that they are using that that they don't look at any of that stuff. They don't look at indicators or VWAP or any of that. And so you can see right here that I don't know what that is. Anyway, so this red line is 0.25. So you can see that price came up to this first standard deviation today and bounced off. Price came up to this first standard deviation. Sorry, second standard deviation. So it blew past the first one, came up to the second one, came back down. Blew past it, came back towards settlement, and it's choppy right here, obviously. And then bounced off this first standard deviation and then took off higher to the second deviation. So what I'm looking at when I do with my play is I look for a break of one of these standard deviations, and then I look for a pullback. And so sometimes I'll use these EMAs and I'll enter off of those. Sometimes I'll wait for a break and then I'll put a limit here and wait for it to come back and test it and then push higher. And so that's what I did right here. These were I had way better entries. I was like in at 30, like my average was 30, and then I got stopped out on one of these moves. I think I was right here. I had bought these 3, and then I got stopped out right here, I think. And then I was playing a little FOMO. I was like, I know it's going to get there. Like, let me just jump in there. So I got a few here. And I think that was around 25 or $3,000. So for 3 contracts, $3,000. So yeah, so you can see here, it respected it here, respected it here, respected it here, respected it here, and then it finally at close broke through it and pushed higher. And so I got those two that I just took profit on, and then I had one runner all the way up here at this third standard deviation. And so, you know, this is something that you guys can do. You can download that thing and use it as context for, you know, to see if it lines up with your support and resistance zones that you're doing. Whatever you're doing, I would strongly suggest you guys download this indicator because it is based off of the volatility and it's based off of the settlement. So it's a calculated move. It's a calculated based off of the market as it is. You know what I'm saying? Like, it's not something that we just make up, right? It's based off of volume. So, yeah, so you could see the moves that I made today. So after it breaks, if you kind of want to dial in your entry, you could just limit in at the standard deviation, or you can use this 22 Renko and look for it to show some sort of respect here. But you can see here, I mean, to the dot right here, boom, boom, standard deviation. Boom, 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 boom. This one is a lot faster moving, but it allows you to stay in the trade longer. So you can see here that this is since 120, right? Or 1240. And that's all up. Even though if you look at a normal chart, you would see that it's, you know, there's these pullbacks and you're not sure. And that helps you to stay in the trade because the bar only will change if it moves 22 ticks. So, you know, you can put your stop behind it. Generally, just depending on your handles, you know, you could put your 42, you could put it at 32 and 10 handle stop and aim for like 50 handles. The majority of my moves with these naked POCs, I try and aim for anywhere between 30 and 100 handles. So anyways, I hope that helped you guys. I gotta run, but shoot me a DM if you have any questions. I'm probably not going to be on Discord for a while, so good luck with you guys, and yeah, take care.
Thank you.
man.
You guys have any questions right now before I go?
Hello?
Yeah, I can hear you.
Oh. Yeah, this is Bobby. I'm sorry, man. I just got on. Are you playing volatility extremes? Like you're playing the reversion, or are you going from one extreme to the next?
So it kind of depends on the day, right? So this whole thing's recorded, so you should be able to watch the whole thing. But like I said, so the standard deviations can be used for both. So the standard deviations, if it's trending, you can use them to, once it breaks a standard deviation level, for a pullback to that level, kind of like a, you know, almost like a Fibonacci retracement. And then you could just set a limit there, you know, so it's, you have a plan when you're entering, this is where I'm going to limit in and I'm going to try and ride it to the next standard deviation if it's trending, you know, as long as it's not too far away from the settlement. So your chances of, and you could do the same thing, you know, on a range-based day. So if it's a range-based day and you're all the way at the one standard deviation, you know that there's like a 90% chance that it's going to close within those those parameters of 1 to 1. So you could do a mean reversion back to settlement, you know. It's kind of, there's not really, it's kind of limitless on that. As far as like the POCs go, yeah, I mean, a naked POC you can use as a target profit. So say like I was telling Magnum, like he had all these shorts and there was that naked POC at 14.6. So he could use that as like a target profit, knowing that that's where the most volume has a big trader stepped in before. And if he would have done that, he would have pulled all those contracts off, 100 and 200 points higher than where it's at now. You know what I'm saying? So yeah, does that make sense?
Yeah, that makes perfect sense. Thank you. Yeah, I'll go back and watch the recorded stream, and if you don't mind, I'll shoot you some questions because I'm curious about some of the particulars about how you're playing your point of control and the different volume nodes.
Yeah, watch the video and then shoot me any questions.
All right, cool. Thank you.
Yeah. Gordon, did you have any questions? I gotta run, so I can answer one more. Cool. Well, you guys take care. Be safe out there. Develop a strategy that works and stick to it. And don't overtrade because that's really what kills a lot of traders. And by the time they understand the market structure, they're just so burnt out from from all these different ways of trading. And so, anyways, you guys have a good one and take care.